How to see weakness in a stock, a very, very important skill I would argue to have as a day trader. So I want to give you a tip that can really help out in this regard. And as I'll show you later in the video, by using this tip, I was able to make in 5 seconds, $500, which I get it sounds like a scam, but I'll walk you through and show you the trade here in a little bit. But this tip is nothing fancy, it's nothing complicated, but I also want you to know it's not a magic pill, so I'm not claiming that this always works or anything like that. But what I am claiming is that when you take little simple understandings and begin to apply these things, they do offer a firm foundation to which you can build trade plans from. So in order for you to implement this tip, you will need to be interested in using technical charts and more specifically, candlestick charts. Now I'm going to give you a brief overview of what a candlestick is, but it'll be very brief. And then I want to narrow in on one component of the candlestick because as you'll see, by understanding a very, very basic dynamic, you can have some good solid success. So let's just first briefly go through what a candlestick is. So a candlestick has right there what is called a body, and then there are upper and lower wicks or upper and lower shadows. Both terminologies are saying the same thing, and that is just something that's going to look very similar to this. So what do each of these represent? Well, let's first just go with what does the entire candlestick represent, and this is representing some sort of predetermined amount of time. So this could all represent 1 minute. This could all represent 1 hour, or this entire thing, this entire candlestick could represent 1 day. So it's all up to you. In fact, there's some members of my trading community where this candlestick, it represents 15 seconds. So they're making decisions very, very quickly. But that's what the candlestick itself is representing. And then the components of the candlestick are this area up here, again, upper shadow, that is telling you how high did the price go during this whatever predetermined amount of time. So if this was a 1 minute candlestick, how high did the price go during that 1 minute? Down here we have, well, how low did the price go during that 1 minute? And then these areas right here, this could be either the open, so where the price started during that 1 minute, or it could be the close. Up here, it could be the open or close. That's just going to depend on the color of the candlestick. But for the sake of this video, those things are not important. So there is the quick little rundown of what a candlestick is. Now I want to draw another candlestick here and then focus on something. Now it's going to be same size candle, but you're going to notice a couple different dynamics that are a little different. So there we have our body. There we have the lower shadow. And then right here, we have the upper shadow. And right here is what I want to focus on because maybe you're noticing, wow, this is actually a really long line here. And this right here is where the potential weakness comes into play. And comes into play because there's never any guarantees, as I mentioned, but it begins to really, make sense for you to question the weakness because this is where you have to stop and think, what caused this long upper line to form? Well, at one point, the price was down around this area and it did go all the way up here and it hit a high of right there. Again, that's what that upper shadow represents, is how high the price went. But the price did not end up. The price did not stay there. It eventually did drop all the way back into this area. Now, it could have closed here. It could have closed down there. Again, that's besides the point because the point here is that the price was up here, but it didn't stay up there. It had a very big drop, and quote unquote, very big drop, you can see because that upper shadow is so long.
Oh no.
And this can be rough for a couple different instances. The main one is if you're in a stock and it's up there and it comes down and you got to start to question, was that the top? Is there going to be a bigger pullback? Is there going to be a reversal? Something that you need to be, very aware of. Or maybe you're thinking, well, I want to buy, but wait a second, maybe I could get a better entry point now because I'm seeing that weakness. And is that weakness going to lead to a pullback or a reversal where I can get a better entry point? Or maybe you're someone that likes to play things from the short side and you like to short. And what does that mean? Well, it means making money when prices go down. And I don't know how much of a beginner you may be, but yes, believe it or not, you can make money when prices go down. That is known as shorting or going short. So that is another category of somebody that may be interested when you see those long upper shadows. And the trade I'm going to walk you through demonstrates something where when you are able to recognize that weakness, you can put some nice money into your pocket. So let me take you to my desktop and you're going to see a candle. And I want you to, start to really immediately ask yourself, what do I notice about this candle? Or in other words, do you see any weakness on the chart as soon as I pull it up? So this is my trading platform, and I'm hoping as you look at this area of the screen, you're noticing something. So I won't say anything right away, but Do you notice anything that is suggesting some weakness has arrived? And if you're saying, well, Clay, yeah, I'm noticing that we have a very long upward shadow here. I mean, look at that upward shadow. Very, very minimal. And right there was no even upward shadow. But right here, yeah, definitely a bigger one. And that's exactly what I saw. And that is what had my mind thinking, okay, I think there's some weakness, or at least enough weakness here where I think prices could go down. And in this situation, you're always facing a choice. Do you want to put together a trade or do you not? And in this situation, I decided, yeah, I'm putting together a trade.
Yep.
And as a quick clarification, I'm doing options here, which is besides the point, but I am looking to buy a put option. Put option just means if prices go down, then that is good. You would make money. And I should also note that if you are interested in learning more about options, I offer a free class called The Big Basics of Options. So if you just comment below option guide, I can link you to that class. And then finally, down here to understand my screen, this whole line here being white means I'm trying to buy right now. But as soon as that turns green, that means I have been able to buy, and then it's going to be very brief. But then a white line shows up down here, and that white line means I'm now trying to sell. And then as soon as that turns green, that means I have been able to sell. But this is all derived from, all right, noticing that upper shadow, I think there's going to be enough weakness for me to be able to pull off a trade here. So let's see how this all plays out. So waiting for it to turn green. So it's green. I've been able to buy. I'm watching. And then just like that, I sold, and you can see $500. And I know I made the claim earlier about 5 seconds. You can see it all right here. The execution time, bought at 9:40:57 and was out at 9:41:02. So yes, 5 seconds, $500. And you can see right there, I did get some weakness. You can see some red showed up right there. So it was not a ton of weakness, but with this strategy and with these options, you don't need a ton of weakness to make these sorts of gains, but you do need some weakness, and I got that weakness.
Bravo!
So there you go. Get yourself some candlesticks, start to keep an eye out for those long upper wicks, those long upper shadows. And once more, there is, you don't want to just start to randomly do stuff because you see a long upper shadow, but you also don't need to overcomplicate things either. That in and of itself can really be a large chunk of a trading plan. Now, if you can factor in some other things, then that's great too. That just gives you more of an edge. But there is an edge by just seeing those long upper shadows in terms of for those always various instances, whether you already own the stock and you're thinking about maybe getting out, or if you're thinking about buying and you need another or better entry, or if you're just looking to go short. And I should also note that this can be used for anything. You just saw it used on options. I realize the title of this video says stock, but the whole principle can be used for crypto or futures or anything else, because that is why I argue charts and candlesticks are so powerful, because they're and should be applied to anything with a price. And if that price fluctuates, well, then a candlestick can tell you exactly what's going on. And in fact, the Japanese invented candlesticks to judge rice prices way back, a long time ago. So I mean, it can be used for rice too if you wanted to. But that's the tip that I think is very, very beneficial, especially as a beginner, someone that's just getting started. Just recognizing a little component of a candlestick can really help you out and put yourself in a good position as a trader. If you have any questions or anything like that, please leave those down below. If you enjoy this, hit that like button. Let me know down in the comment section. And if you're not subscribed yet, make sure to hit that subscribe button. Thanks for watching. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.